This stock is definitely in a free fall. What I am doing is, all right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk to you about a company called Romeo Power Inc., stock ticker RMO. We have covered this stock on the channel before. We did a video 2 or 3 months ago, and I wanted to do an update because there have been some major developments and some massive movement in the stock. So I want to revisit this and go through and try and bring people up to date. Romeo is in the EV sector. They make battery pack fuel cells. And in addition to that, they are a small cap, high growth stock. So this is exactly the type of content that we cover on this channel. So if you enjoy that type of content, please subscribe to the channel and hit the notification button so that you know when we put out a new video. In addition to that, if you enjoy this video, please do us a favor and smash the like button and give us your feedback below. So a little bit about myself. I have a background in accounting. I was a CPA. I've been trading stocks on a retail basis for the last couple of decades. So I'm just looking to share my experiences with you guys, and hopefully we can make some money along the way. So let's talk about Romeo. Okay, so at the moment, Romeo is trading at $2.31. It's down about 6.5% on the day. If you look down here, you'll see the days range and the 52-week range. You'll see that Romeo is at its 52-week low. And this is a stock that continues to hit its 52-week low almost every single day. So we will look at the chart later, and I'll show you just how oversold this is, in my opinion. Romeo now has a market cap of $306 million. So to put that in perspective, they have cash of $181 million. Debt of $6 million, so net cash is about $175 million. They're down to a $306 million market cap company. And this is a company that was trading over $20 within the last 52 weeks, and it was even actually much higher than that. This is Romeo's website, Romeo Power, powering the world's largest commercial vehicles with the first battery electric vehicle pack series. So this is what these guys do. Romeo Power's proprietary pack family exhibits application flexibility and is capable of powering a range of commercial vehicles spanning from Class 3 delivery vehicles to the largest long-haul Class 8 vehicles. So this is what they do. In a nutshell, this is their elevator speech. The results speak for themselves. Packs for every application that go further on a single charge and last longer charge after charge. So essentially, they feel like they've got a better battery, it goes further, it lasts longer, and that's their selling point. And you're going to see later, they actually have a massive backlog of sales. Let's deal with the most recent news. They put out a press release on January 18th, and this stock has been decimated since they put this press release out. It does not seem like the kind of press release that would have that impact, but it has, and I'll go through a few reasons why I think that's happening. One of which is the fact that the entire stock market is getting pummeled. The small cap, high growth stocks in particular. So, it's got that headwind against it. And in addition to that, I want to just talk about what they say in this. So it's titled, Romeo Power Announces Appointments to Key Executive Leadership Roles. Appointment of Chief Operating Officer and Chief People Officer solidifies Romeo's new leadership team. And again, I like this company. I own this company. I'm buying the dips on this company. So I'm not knocking them, but I got to be honest when I read these and tell you my thoughts. This is some of what's hurting them, in my opinion. They put out a press release saying they've appointed a new chief operating officer. Well, nobody knew that they were losing their current chief operating officer. So that really should be addressed separately. It is mentioned in this press release, but it's almost an afterthought, and really investors want to know, stuff happens, executives get switched out, there's, this company has struggled, a lot of different stuff has gone on, so it's not the fact that they've changed chief operating officers, but it is the fact that that is probably the second most important position in the company next to the chief executive officer, and they're telling us about their new one, and we didn't even know that their old one was leaving. This just doesn't leave you with the feeling that you are in the know on your investment in this company, and I feel that they glossed over that, and it may not seem like a big deal, but you will see the market totally trashed this stock after this press release. So they say they've named Ann Devine as Chief Operating Officer and Rose Rogers as Chief People Officer. Now, I don't think the market is going down because they don't like those individuals. They may be extremely qualified, and I'm hoping they do a fantastic job. I think it's just more the presentation of how this is happening. And I'm going to add one more thing. So again, this is just reality of investments. This company tends to do things like hire chief people officers. So that is not a typical position that you will see. It very much sounds like a feel-good position. Certainly the title is sculpted that way, and it just doesn't instill confidence in investors. If this is their head of human resources or whatever the case may be, a chief people person, that's a new one for me. And again, it doesn't instill confidence. So it's not a big deal. It doesn't really affect their operations in the long term. But what's happening to this stock and why this stock is getting punished is investors have no confidence in what's going on. And these are some of the little reasons that add up to that. I wish Ann Devine and Rose Rogers the best of luck. Obviously, I'm an investor in this company, so I hope they have great success. And I think Romeo is going to have great success. So again, it's more about presentation. Okay, so quickly, I want to go through the last quarter that they reported, which was the third quarter. The quarter ended September 30th, 2021. This was a very good quarter for them, and they've had a series of horrendous quarters. This company ran into a supply chain problem. They were unable to produce their product for a while, and their sales went to virtually zero. So they needed a gigantic fix to this problem. They have gotten that fix. They have a supplier. They're looking for additional suppliers so that they're not just dependent on the one, but they are back up and running. And you can see third quarter financial update generated revenue of $5.8 million, a 753% increase over the prior year as the company launched product shipments to the company's largest customer. So 753% increase, and a lot of that is due to the fact that some of these year over years, Romeo just started going within the last year. So just as they were getting going, they had to turn things off. So you're going to have a lot of year over year quarters where the growth is astronomical. But the most important thing to see is that there was sales and revenue, because that had come to a halt. So the company's been turned back on, and we'll talk more about, they give their fourth quarter projections. We'll talk about that later, and they're good. So all this is pretty good stuff, yet the stock is at its 52-week low. They then say cash equivalent investments as of September 30th, 2021 was $181 million, reflecting continued strong liquidity. So that is important. This is a part of their 10Q filing to the SEC. Item 2, management's discussion and analysis of financial condition and results of operations. I want to focus on just one thing that they mentioned in here. Okay, under the category of product revenues, there's actually two things here in this one sentence that I think are the most important thing in this whole entire management's discussion. They say here, minimum quantity commitments related to contracts signed through September of 2021 is approximately $547 million of backlog. Again, this is a company whose market cap is now down to $300 million. So their backlog is significantly larger than their market cap. While they were unable to fulfill these sales for a while, they haven't really lost any of their sales, and they are now starting to fulfill sales. So that's the first sentence. The next sentence is equally important. With the completion of the delivery of engineering and prototype services, we expect to recognize approximately $9.8 million of this backlog revenue during the remainder of our fiscal year ended December 31st, 2021. So that is their fourth quarter guidance right there, almost $10 million of sales. So if we look in the third quarter, they had $5.8 million in sales, and that represented a 753% increase. Well, it looks like they're going to almost double that in the fourth quarter. So you can see things very much trending in the right direction with this company. Whereas for about 9 months, they were dead in the water. Things seem to be picking up and moving in the right direction. So with all that information, let's go take a look at the chart and see what has happened to this company. I'm going to start zoomed out, and then I will zoom in and talk a little bit more detail about what's going on right now. So you will see this is a little bit beyond their 52-week period, so it doesn't count as their 52-week low. This was December, so this was about 13 months ago, not 12 months ago. But from their high in December of 2020 to now just 13 months later in January of 2022, This company is down over 93%. So to me, that is absolutely shocking. And I'm going to show you a few other numbers because you may say, well, it was way overbought at that time when it hit $38 or $39. So that was unrealistic. So let me show you a few other numbers that are much more realistic. It's down almost 78% from June 8th. So this stock has taken beating after beating after beating. I'm going to zoom in a little bit and show you what's going on recently. So you can see I've drawn a little bit of a line of resistance here at the $5.74 mark. You'll see on their second quarter earnings report, they broke through that. That report was not good. That was another in a series of bad quarterly reports. However, we just looked at the third quarter earnings report, and you can see that we gapped up and then went up on these earnings. So the market liked those earnings. Unfortunately, from that point, as is the case with most small cap stocks, this stock has just gone down in virtually a straight line. So for Romeo stock, just to get back to where it was on the day of its last earnings report, was just November 16th. So that was just 2 months ago. This stock would have to increase 141%. I mean, that's incredible. So that's just 2 months. And the thing is, other than the press release that I showed you with some new management, really there's no good news or bad news with this stock since their earnings. They would have to much more than double just to get back to where they were 2 months ago when they reported earnings. And I expect their next earnings report to be better than the third quarter earnings report. Okay, so for this stock to get back to where it was in June of 2021, and again, you're going to see when I zoom out, this is not an aggressive goal because this is nowhere near their 52-week high or their 13-month high, which was close to $40. So we're already down, close to 70% here. So if they could just get back to that point, that is a 380% increase in the price of their stock. So that's basically a quadruple. That seems unreasonable and unrealistic, but they were just there 7 months ago. And again, they were wildly higher than that 12 months ago. I'm not saying this is a 90-day goal, but I don't think it is at all unreasonable to expect to see Romeo back to these price levels sometime in the next, 18 months. So that is a fairly short-term goal, and maybe it takes 24 months. That's 2 years. You're talking about a 380% increase in the price of their stock. And I'm going to show this on the other chart just to put it in perspective. So when you look at it on the 1-year chart, all I'm doing is getting from here to here. This stock spent most of the last year well above that. We have a line of support at $15, another one at $18, $23, and I will admit, these numbers up here may have been way overbought. So I'm not even talking about those. I'm not even talking about these or these. I'm just saying if they can get back to where they were after the stock had already crashed 72% from its all-time high, that's almost a quadruple on this stock. So that's how I'm looking at this. I will tell you, on the flip side of this, we got to look at risk reward. This is below any line of support at this point, and it just continues to fall. So again, this is not financial advice. This stock is definitely in a free fall. What I am doing is averaging in. I've shown you a couple of price targets that I think are realistic in the next 1 or 2 years. So you guys can decide whether or not you think this one's a worthy investment. So that's all I got for you on Romeo. Thanks so much for watching, and don't forget to smash the like button, and we will see you in the next video.